Welcome to the Wednesday edition of the Tech Stocks Daily Podcast, where we sift through the silicon for the juiciest stories. Today, hold on to your smartphones as AppLovin hits a crisis mode amidst alarming ad fraud accusations that's got investors filing class actions faster than you can say download. Then we turn to Meta Platforms, turning heads with undervalue Intrigue despite some daring financial ratios. It's a stock market love story with a twist. Finally, we'll delve into VEON's strategic power play as they appoint a new corporate development officer to navigate their growth dreams. Stay tuned for a techie roller coaster you won't want to miss. Hold on to your gadgets, folks, because today's tech circus brings us a headlining act featuring the company you may know from the app world wonders, AppLovin. This major player in the mobile advertising ecosystem has taken center stage, not for new innovations, but for some rather alarming allegations that have turned the investor community into a frenzy. Let's break this techie drama down. AppLovin, traded under the ticker APP on NASDAQ, is under the microscope due to allegations that have raised more than a few eyebrows. Several reports, including a bombshell from Fuzzy Panda Research, suggest that AppLovin has been involved in ad fraud activities and is guilty of engaging in suspect business practices. This includes some juicy claims of reverse engineering advertising data from none other than Meta Platforms. Talk about wrestling with the behemoths, right? Now, how did all of this come to light? On February 26, 2025, before that first cup of coffee touched the lips, the world was hit with news accusing AppLovin of using cutthroat tactics not so kindly regarded in the glossy corridors of Silicon Valley. Allegations spanned from illicitly siphoning child data to cheeky manipulation of ad click-through rates and user installations. It's essentially accusing AppLovin of selecting creative ways to inflate performance metrics without a magic wand. What repercussions did this conjure for AppLovin stock, you ask? A downward spiral, naturally. The share price swooned from $377.6 all the way down to $331 on announcement day, marking a stark 12% drop. Yikes. Unsurprisingly, following these revelations, legal eagles descended with alacrity. A slew of class action lawsuits were swiftly filed by firms such as Braunstein, Gewurz & Grossman LLC, Berger Montague PC, and the Gross Law Firm. They are hunting down investors who took a hit during the so-called class period to lead a legal blitzkrieg. These lawsuits aim to salvage damages pertaining to alleged federal securities law violations by AppLovin. The spicy part of this saga is not just a stock dive reminiscent of a roller coaster plunge, but the speculation of unethical drama behind Axon 2.0, their touted AI-powered ad platform. At the heart of it is the question: has AppLovin sprung successful ad matches from sketchy shadows? Fortunately, interested AppLovin investors won't be licking their wounds alone. They can join these class action suits, and the deadline to get on board this legal odyssey is May 5th, 2025. For now, the AppLovin debacle reminds us of a brewing techno-legal melodrama packaged neatly in what seems to be just another day in the world of digital hearts and financial darts. Follow the legal joust or watch the market tremble. Either way, it seems AppLovin's digital parade has marched right into the news with full throttle. Stay tuned and maybe consider double-checking your app monitoring settings. Hey, tech enthusiasts. Today's headline hot off the press from the NASDAQ is about Meta Platforms, Inc. Yes, the company formerly known as Facebook. We're diving deep into its recent eval in the interactive media and services industry. Forget keyboards clacking away like it's Judgment Day. This news was actually cooked up by Benzinga's automated content gurus and given the old human touch by an editor. Let's break down why Meta is all the buzz today. First up, financial analysts are eyeing Meta for what they describe as its too good to resist price-to-earnings ratio of 26.25. It's significantly lower than the industry average by 0.35x, making it, believe it or not, undervalued in terms of growth potential. This makes it a potentially stylish pickup for bargain hunters in the stock market. Imagine Meta as that swanky car parked way cheaper than it looks. But hold on to your VR headsets, because there's a twist. Meta's price-to-book ratio stands at a spicy 8.69, which is 2.92x above industry averages. So in terms of book value, it seems to be flexing harder than its peer competitors, making it appear overvalued. It's like meeting someone with Chanel taste living on an H&M budget. Interesting, yet paradoxical. Going even further down the rabbit hole, the price-to-sales ratio at 9.95 signals a little premium action happening, ringing in at 2.94x the industry mark. This suggests the stock might be a tad on the high side relative to sales performance. It's all about strong market sentiment, folks. Nothing stops a strong narrative and brand loyalty train. Now onto the good stuff that shows Meta strutting its stuff. With return on equity at a solid 12.0%, which is noticeably higher than stylist industry standards, they're efficiently spinning shareholder money into pure, tasty profits. And with a beefy EBITDA of $28.26 billion, 6.56 times the industry average, mind you, the cash flow front is pretty much the Aladdin's cave of their financial reports. Gross profit, supersized at $39.55 billion, positively dwarfs against its industry friends, clocking in at 5.54 times the market average. It's basically Warren Buffett-approved financial robustness. Don't you wish you could say the same about your savings account? Last but never least, they showed us their revenue muscles with a phenomenal growth rate of 20.63%, way ahead of the industry's sleepy drizzle at 3.68%. Seems like the market isn't just liking, but loving what Meta's cooking. And here's a cherry for that sundae. Meta's debt-to-equity ratio is a chill 0.27, highlighting their conservatively strong capital balance. With overall less debt, they're comfy strutting all the shiny equity they've got. Picture Meta sitting in a Zen garden, utterly unfazed. So, dear investors and techies of all stripes, Meta Platforms has its stocks showing solid potential for those after something strong and favorably balanced with moderate growth allure. If stock markets had a yearbook, Meta would probably win, most likely to succeed. And that's what has everyone talking today. Today's tech buzz centers around VEON, the global digital operator making waves with their latest executive appointment. VEON is on the map today for announcing the new role of Anand Ramachandran as their corporate development officer. Effective May 1, 2025, Anand is set to lead VEON's mergers and acquisitions and investor relations teams. Now, why is this news important? Well, Anand isn't just anyone stepping into this role. With nearly 3 decades of experience in international financial markets and investor relations, Anand brings a wealth of knowledge that VEON aims to leverage at this pivotal juncture in their journey. Before taking on his new role, Anand had already been making significant strides at VEON as Chief of Staff since September 2024. For those unfamiliar with the corporate ladder nuances, the Chief of Staff is usually the strategic wizard behind many internal initiatives, and it seems Anand's wand was working overtime as he impressed not just the team, but also the CEO. Speaking of the wizard advisors, Anand also spent time at Singapore Telecom, holding the Vice President of Business Management title, which means basically, I make magic happen behind the curtains in the group CEO's office. What a title, right? This comes to highlight the diligence and wisdom Anand offers. Not the kind you find scanning through a textbook, but built from real-world experiences across telecoms and the intricate spaghetti that is financial markets. VEON's group CEO, Kaan Terzioglu, sang Anand's praises, emphasizing how their strategic goals will significantly benefit from Anand's experience and leadership. Much like handing a pirate's map to an eager explorer, charging ahead to discover growth treasures. Terzioglu is betting big on Anand's capabilities, stating that now is the perfect time for his know-how as VEON finds itself at the crossroads of growth and innovation. This directorial chess move goes beyond just swapping employee cards. VEON, operating in 6 countries with a staggering customer base, aims to transform how we connect and engage through technology. Hence, a growth strategist like Anand isn't just an asset, he's literally part of their GPS, charting new business horizons. Now viewers, here's where I bring you into the conversation. What do you think about VEON's latest juggernaut roll mash? Are they setting up for a record sprint? Or are they playing a meticulous game of chess, planning each move with caution and precision? Drop your thoughts in the comments. Who knows, maybe your 2 cents will catch VEON's attention and add some flavor to their strategic roadmap. Looking forward to reading your witty insights. All right, let's put the spotlight on Meta Platforms today. Just like hopping onto a MetaQuest headset and diving into virtual reality, thinking about investing in Meta adds layers beyond just simple decision-making. So here's our take on whether to buy, hold, or sell Meta based on today's buzz. Looking at the numbers, Meta seems to be sitting pretty in a favorable position. Financial analysts are falling head over heels for its rock-solid price-to-earnings ratio of 26.25, which is giving off major undervalued vibes when compared to its industry peers. It's the kind of financial allure that could make a savvy investor consider clicking the buy button. This stock isn't sending just smoke signals. It's a full-on torchbearer indicating potential growth. But wait a sec, there's a twist in the narrative. Meta's price-to-book ratio is markedly higher than the industry average, flagging it as possibly overvalued on the book value front. Not to mention, the price-to-sales ratio, another spicy stat, pegs it as trading at a premium. Think, a company that's flashy with the numbers, yet still suggesting you peer twice at the abacus. On the bright side, Meta's return stats are flexing some serious muscle. With excellent return on equity and a whopping EBITDA, it seems like this stock sits like royalty amongst itself. Add in Meta's debt to equity that's as chill as an AI assistant, signaling financial stability, and it's hard not to see the appeal. Considering these metrics and today's enthusiastic appraisal, our take would be to hold for current investors. Meta shows solid strengths, however, keep a sharp eye on any indicators of the premium price leveling out. Would-be investors might feel the pull to buy, especially those with an eye for bargains when PE ratios look this inviting. Proceed, however, with caution. As always, make sure to do your own research, dive deep into financial data, and consider consulting with a financial advisor before making investment decisions. Investing is as unique as fingerprint tech, tailored to your financial DNA. So mingle with the data and invest wisely. Today was a roller coaster in the tech world, with AppLovin's taking a nosedive amidst ad fraud allegations, Meta basking in its favorable financial metrics but raising some skeptical eyebrows, and VEON making strategic moves with a powerful new appointment. It's been a day of financial fireworks and strategic shifts, painting a colorful picture of the digital landscape on the NASDAQ. Keep those notifications on point, and if today's tech theater kept you on the edge of your seat, make sure to hit the like button. Don't forget to subscribe, share the excitement, and we'll catch you at tomorrow's Leave No Chip Unturned roundup.